What is up, ladies and gentlemen, boys and girls? Welcome to the Monday Market Update. This Monday, November 27th, the first day of the rest of our lives, the first day of the rest of the year. It is officially holiday time. I hope you all had a restful Thanksgiving and were able to take some time with your family, with your friends, with a big plate of food, and get ready to sprint to the end of this year. My name is Sean Grapevine. I am the director of Agent Direct. That's all the introduction you need about me, but you get even more for my co-host today. He's the Mac of the Rate Stack. This morning, he had his bips for breakfast. He does best efforts with absolutely no effort. He's the Baron of Bips, the Lord of the Locks. He's the Sultan of SLAs. As Ben Bell is to manual underwrites on manufactured homes, so my co-host is to steadying our ship in a turgid and lessening less tempestuous 10-year sea. He pardoned the turkey of monetary tightening last Thursday, and today he's responsible for the discounting of the 10-year T-Nate for today's Cyber Monday sale. He's the king of collateralized debt, the colossus of credit. It's Stone Cold Steve Austin Koenig. Welcome, Austin.
Sean, that was fantastic. Great job again. And apologies, while my introduction may be long and make me feel indestructible, I did catch a cold over Thanksgiving break.
Unbelievable.
I blame that on one of my many cousins that shall remain nameless for the for the Monday market update, but it is what it is. I have a huge family, and when you have 50 plus people at your Thanksgiving gathering, it's hard to blame one person. So we're just going to blame everyone.
There you go. There you have it. Austin Koenig's family trying to dismantle UMortgage immune system by immune system, but we will not fall. I will be the Scottie Pippen to your Michael Jordan flu game. And we'll keep it nice and short here. But we won't skip anything. Last week, no news really to speak of. Fed minutes, maybe.
Yeah, so we had some economic prints and we did Fed minutes, but we didn't have anything that like moved the market. And like I said at the beginning of the week, we have a lot of people that are not really paying attention much this week, the past week, right? Because it's Thanksgiving, markets closed for a half day on Friday, closed Thursday, half day on Friday, right? So very little volume going around, and there's just a little bit of debt issuance as well to worry about. This week we have a little bit more of a headline grab, and it really starts with PCE. We have a couple different things printing this week, but PCE is the main one. We have some Fed speakers talking as well, and we also have GDP data. So those are some of the big ones I would say. Friday, we shouldn't actually discount this at all either, but ISM, which is the manufacturing data, that shouldn't be discounted as well, but that does kind of come in at the tail end of some, I would say, even more headline grabbing data.
And not to be missed, new home sales out 5 minutes ago. Small miss there, I think. Actual home sales down 5.6%, while it was forecast to be down 4.7%. 679,000 was the actual, forecast at 721. So small miss there, but not too unexpected. Doesn't look like it's moved the needle very much either.
No, not too much needle moving from that one. Right now we're just seeing kind of an improved day in pricing, which is good. Mortgage-backed securities have done a little bit better over the past couple of weeks, which has been good. So their value relative to treasuries has slightly improved. There's still a ways to go. I'm not saying that the battle is finally won by any means. It's just a little bit of, wins in the win column. But we still have a long season ahead of us to try to get to more normal trading.
So yeah, interesting. So we're I would say about 300 basis points in yield off from the 10-year right now. That's a pretty wide gap?
Yeah, that's a pretty wide gap. But a lot of times we talk about basis as one form of measure as well. That's probably improved like on aggregate about 30 bips. To go to like historical levels, we need to see probably another about 50 bips, if not more, of general improvement. So, and the thing is today, if you look at rate sheets, Govy might not be that improved, but conventional may be approved. And honestly, this is one of those things too. Open up the rate stack. I can't preach that enough. If you're probably getting shopped by other people as well. They're opening up the rate stack. You need to open up the rate stack. That's exactly what you have to do, because that's where the most value is going to be. And everyone who has a juicy certain rate one day, they might take it off, and someone else implements that the next day. So you just have to be kind of almost erase your mind from what happened yesterday and move on to today and say, I got to reopen the rate stacks.
There you go. You heard it here first, second, third, and 10th. Open your rate stacks, please. So pretty good news rate wise. And like you said, we got Fed governors speaking all week. We've got all sorts of and then we've got PCE. Now, is CPI a preview of PCE, or is PCE a preview of CPI? I can never tell.
Your first statement. So CPI is looking at the same month PCE is looking at, or same
that makes sense.
Value of data, like time value of data, right? So, but PCE is what they call the preferred measure, but at the same time, it'd be weird if they were way different. So we kind of already know a little bit what's going to look like, but it could be slightly different. But
maybe it'll be really different this time, Austin. Maybe it'll be great news for us. Maybe it'll be our first gift of the holiday season. Is just they're like, we really screwed the pooch on CPI. PCE is actually, we solved it. Inflation's done.
There we go.
So that's what I'm hoping for. As usual, I'm always wrong. For the third week in a row, I predicted a slow melt up in rates, and once again, did not have it. So you have it on the record here for the fourth week in a row. 10 years at about 4.438 right now. I'm going to go ahead and predict a slow melt up to the 4.5. So you guys are all welcome. When I'm wrong for the fourth time in a row, that will result in lower rates. So good to hear about mortgage-backed securities improving relative to the 10-year. Is that just like stability entering the market, liquidity? Is there an increased appetite for mortgage-backed securities? Are people, ready to? Is it people are piling in? That doesn't seem like they're necessarily piling in, but entering the market because they sense that this is like the end of the rate hikes for good. What's the reasoning behind that?
I think there's kind of a culmination of different reasons. It's not enough I don't have enough evidence to say it's one different reason, but a lot of things that I'd say scare people away from mortgage-backed securities may reverse course here in the near future. Like we're not going to have as much supply of mortgage-backed securities just from the general standpoint of, the mortgage industry has shrunk from year over year, and we're not going to see as much issuance, right? And we're going to see a lot of issuance of treasury. So there's kind of the different appetites for debt. Who wants that debt? Are banks returning to the market after seeing some kind of a little bit of a guarantee of rate stability? And banks are one of the biggest buyers of mortgage-backed securities. SVB was a huge buyer of mortgage-backed securities, and that got news for the wrong reasons. But if you properly manage your held-for-sale book, mortgage-backed securities are an attractive investment. And maybe those banks now seeing kind of, hey, the writing's on the wall, the Fed might be done hiking rates. Let's start going to put our deposits to work in this stuff right now. So we'll see what, and this looks like relatively cheap value. And a lot of people have been saying that. And I think just maybe some allocations gone to the mortgage-backed security way. But there's still a lot of room to improve. And I don't want to say by any means victory is won. It's an improvement to note, but not to say, hey, mortgage-backed securities are killing it right now. That's kind of like overstating it.
Don't worry. None of us are in danger of accidentally thinking that is the case. Well, we'll take pity on you this morning as you rest up from your pathogen filled Thanksgiving. But before I let you go, any news on product, process, partner that we should know about?
Don't have any news for today, but we do have a good daily sales huddle tomorrow that I recommend everyone tuning into. Myself and Reese will be kind of talking a little bit on kind of secondary markets 101, but mostly talking about rate renegotiations. And we'll obviously talk to you guys a little bit more in depth about what it is, the capital markets side behind it, but also kind of some best practices. And I know this is something that is coming across everyone's radar. And we just want to make sure that everyone's well educated on this. So definitely one to tune into tomorrow.
Whoa, guys, the peak is officially in. We are having a sales huddle about rate renegotiations. Get your float down fingers ready. It is open season. Next thing you know, next week we'll have somebody come on and talk about cash out refis, God forbid. This is exciting news.
Yeah, no question. Well, hopefully there's not too many float downs that need to happen. It's a painful thing for everyone involved. I'm just going to say that. That's sort of spoiled the matter, but let's just have a slow meltdown instead of this herky-jerky volatile time. So that's what we want.
The lock desk wishes and my wishes, they don't always go together as a loan officer. I just, I want this 10-year to crater. You guys will have a tough week, but after that, it'll be smooth sailing. So, well, for your sake this week, I hope it waits until next week to crater. And thanks for being with us, playing through the flu. Definitely a double on your behalf today. Plenty of assists from me, obviously. We'll be on the lookout for Fed speakers, PCE on Wednesday, initial jobless claims, and GDP revisions. It's a fun week. So thanks, Austin. Thanks to all of you out there in TV land. I hope you have a fantastic day. Let's go get some loans.
Sounds good. Thanks, Sean. See ya.